in Congress passing another stimulus package. What will be the key drivers for the market in 2021? Joining us now are Angela Mwanza, Managing Director and Private Wealth Advisor at UBS, and Ernesto Ramos, Head of Equities at BMO Global Asset Management. Welcome to both of you. Angela, let me begin with you and pick up on something that Bob just mentioned, and that is the push into what broadly could be said to be sustainable investing, whether it's different emerging energy trends or other forms of sustainability, renewable energy, smart mobility. Do you see that as a 2021 winner?
Absolutely, Tyler. I see it as a short-term 2021 winner, and I see it as a long-term winner. Ultimately, you have governments, corporations globally that are committed to carbon neutrality, which means they have to bring their greenhouse gas emissions down to levels that they've committed to at the Paris Agreement. If you think of who are the biggest emitters, it's power generation, it's transportation. And so whether or not you believe in climate change, you're going to look at trillions of dollars of investment, you're going to look at subsidies, you're going to look at regulation that on the positive side provides a great tailwind for sustainable investments. On the risk side, for those companies that are going to have to relook at their balance sheets and their business plans, that could be a little bit challenging. But we love the space. We love renewable energy. We love smart mobility. We think these are fantastic trends to invest in, both in the short term and in the long term.
Before I move on to Ernesto, Angela, I assume you're saying here, from what I sense, that this is not merely a Biden play. This is a global thrust in this direction.
Absolutely. Just last week, you had 70 global leaders come together to say the commitments that we made towards an average global warming temperature level of 1.5 to 2 degrees Celsius is not enough. We need to up the ante. We need to ramp it up. And so if we just look at something like renewable energy, right now, 8% of global electric production comes from wind and solar. By 2040, we anticipate 40 to 45% to come from wind and solar. Same goes to looking at batteries and electric cars. 4% of newly sold cars are electric today. That's going to ramp up also to about 40-45%, going from a $6 billion market to a $1 trillion market. The opportunity, again, whether or not you believe in climate change or like ESG or sustainable investments, ultimately there is going to be incredible tailwind that is supportive of these investments.
Ernesto, as we look at 2020, I think the story of the year has, equity-wise, has largely been growth over value and big over small. The valuations of growth stocks versus value stocks that gap is really as wide maybe as it's ever been. Do you see 2021 as the year that compresses some, or that value and small begin to close the gap on big and grow?
I think that valuation should compress, and that means that the valuation gap between small and value, which as a group, and large in growth will start to narrow. And there's a lot of catalysts, but very simply put, there's going to be a very strong economic rebound in the U.S. economy. We anticipate in 2021 as the vaccinations grow in terms of having been given to more and more people, as well as pent-up demand for consumption is unleashed. So we're very excited about the prospects for earnings growth, which at the end of the day is what will drive stock prices in the year 2021 from where we sit.
At the end of the day, earnings always do, don't they? I mean, really, when you look at it, it's earnings plus dividends plus some speculative value in there that determines the price of a stock. So let me ask you, Ernesto, with the growth stock valuations where they are, whether they are stretched or not, they are high. You can make a case that they're not stretched relative to interest rates, I suppose. But will 2021 be a kind of show me year where those companies that have high valuations, if they miss on earnings, they're going to have they're going to hit a banana peel, aren't they?
Well, that's been the case for a long time now. These stocks, a lot of these stocks are are priced for perfection,
right?
And there's no room for error. We see the opportunity in the cyclical stocks, even though today is not a good day for them, and it hasn't been for a number of years. But as the rebound starts taking place in the actual economy, perhaps with a second fiscal stimulus package, but certainly in the general economy rebounding and perhaps interest rates going higher, as more and more supply to the market, we will see a rebound in the more cyclical areas of the market, in particular in the value areas of the market, and stocks like Morgan Stanley, Walmart. Well, Walmart's very defensive, but AGCO might also do well in this type of thing.
Ernesto, thank you very much. And I saw Angela sort of nodding her head in agreement there. Thank you both very much. Have a good holiday season, folks. Appreciate it.
Thank you.
All right, consumer confidence falling.